Alright, ladies and gentlemen, welcome back once again. And in this video, we're going to be talking about the trade bracket strategy, alright? And how we should use it to execute our trade, alright? Alright, but before that, there are two disclaimers that I want to make. And the first disclaimer is trading is very risky and you can lose a lot of money. So this is not financial advice. Trade at your own risk, alright? And the second disclaimer is I don't do account management, I don't do investments, I don't inbox people asking for money, so be aware of scammers, right? Then another thing is if you're finding trouble understanding the things that I'm going to be talking about in this video, that means you should go ahead and watch the very first two videos that I made talking about this strategy, right? So those two videos go in depth. They explain so many things that I'm not going to be talking about here, right? And what I'll do is I'll leave the links to those videos in the description below. So go ahead and first watch those videos before you watch this video right here, right? Because this video I'm just going to get straight to the point, right? All right. So the very first thing is we want to start on the 4-hour time frame, all right? And the reason why I want to start on the 4-hour time frame is we want to know the directional bias, the overall bias of the market, all right? And as you can see, the market made a push, a pullback, and a push, okay? So if I stop right there, you can see it created this break right here, all right? So it created a break to the downside. So the overall bias of the market, so let me go ahead and just label this, all right? So this is the 4-hour break, all right? This is the 4-hour break, all right? What that means is this would be our lower high, all right? Or the 4-hour lower high, right? And this right here will be our 4-hour lower low, okay? All right, as you can see, until this point, this is the market structure that we have marked, okay? So the next step of the market, all right, up to this point, okay, will be market has to make a pullback, okay, and then continue to the downside, all right? And this pullback right here is the heartbeat of the strategy because it's what we want to capitalize on, and this is where we shall enter this trade and exit this trade, all right? Now when we go, because we're going to go to a lower time frame, okay, next, but when we go to a lower time frame, this pullback right here will be in an uptrend, okay? This does not mean that the price has changed direction or the direction of bias has changed. No, it will simply be in a pullback because it is the next step of the market as soon as it creates this break, okay? So I don't want you to get confused. This is what, this is where most people get confused, okay? Because when they see this uptrend right here on the smaller time frame, they think that price has changed direction. No, the overall bias of the market is to the downside because we created this break on a higher time frame, and that means we're only looking to sell, only looking to sell, right? All right, so now next thing we want to do is go to a lower time frame and mark the market structure. So that's what I'm going to do. So let me go to a lower time frame, and lower time frame I want to go to is the 15 minute. All right, so let's head to the 15 minute right now. So let me scroll back. All right, and like I said, like I keep saying, you need to first back test this strategy first before you apply it on your live account, okay? So don't just go jumping on the live account, okay? So first go test it on your demo account. Then when you're comfortable with it, you can go ahead and test apply it on your live account, right? And as you can see, this was the market structure that we marked on 4-hour time frame. So now we want to mark the market structure on the 15-minute time frame, which is very, very important, guys, okay? You need to know how to mark your market structure. So I'm gonna go ahead and mark the market structure. So this pullback right here started from right here. Okay, this was the lowest point of the pullback. Price made a push, pullback, push, pullback, push, pullback, push. All right. In fact, it made all the push all the way up here, then pull back, then push, pull back, then drag the market out. I don't think I can adjust it, so let me go ahead and get it one more time. All right, it made a push. All right, pull back, push, pull back, push, pull back, push. Final push right here. All right, so I just used my eyes to draw this market structure. That's why it is very, very important to know how to mark out your market structure. Right. All right, so and as you can see, there's a break right here. Okay, this right here is a break. This right here is also a break. This is a break. I have a break right here. Scroll out because it's a bit the pullback is a bit long, so let me keep scrolling back. So this right here is also a break. This right here is a break. This right here, if you zoom in, is also a break. And this right here is also a break. All right. All right, so let me go down now and mark the structure point. So this right here will be our higher low. All right. And since I don't want to do it again, I'm just gonna go I'm just gonna copy and paste. Okay, Control C, Control V a couple of times. So I'm just gonna keep pasting and pasting and pasting so that I get several instances, because I don't want to do it again. All right. So I'll just go drag this right here. So just copied several instances of what I just copied and paste several instances of what I just copied. Okay, so this right here will also be a higher low. All right, so let me go make more. Control V. This right here, and the last one, Control V. All right. All right. So I'll put it right there. So let me go do it again now. So right here will be our higher high. All right. Control C, Control V, Control V, Control V, Control V. I'm just pasting now several times. Okay, like I said, I don't want to do it again. I don't want to keep doing it again. I don't want to keep doing it again. Right? Be a higher high, higher high. Guys, if you don't know what I'm talking about, then you should definitely go watch the two videos that I've just talked about. Okay, the links will be in the description below. Right? So Control V. Right? I think it copied it all the way down here. Let me Control C, Control V this, right? Just put it right there. Alright, so I don't need this. So this right here is the structure we have marked so far. Okay? And it's very, very important to know how to mark your market structure. Okay? Alright, so let me zoom in. So now remember, the strategy comes in play when we get the break of this last higher low. Okay, so when we get a break of this last higher low, we should go ahead and draw our trade bracket, then wait for the price to pull back. Okay, so that we take this sell all the way to this lowest point the pullback started. All right, this right here will be our lowest point. All right, but before that, there's something I want to mention, and I keep mentioning this every video. Right, we talked about the use of alerts and pending orders for us to be able to trade the strategy efficiently, and let me go ahead and show you that. Okay, so if I go ahead and pick up my my cross tool right here, because I want to highlight where the pullback started, and I want you to be careful and watch below. Okay, below where this whole window is. As you can see, the pullback started, you can see there's a date and time. Okay, the pullback started around around 25th September 2025, 18.6. Okay, so as you can see, it's at the 25th September 2025, the lowest point. All right, and then it pushed all the way until 1st October 2025. And my whole point is this pullback right here took some time to form, and you don't want to be on your charts, guys. Okay, you don't want to be on your charts just to wait for this pullback to form, and that's where alerts come in handy. Okay, that's the reason why we use alerts. Okay, then another thing, let's look at where the break happened. So the break happened around 1st October 2025. Okay, and it says 14. All right, so 14 is 2 p.m. All right, so what I'm saying is the pullback and a break takes some time to form, and you don't want to be on your charts, guys, the whole day just to wait for all this pullback and then the break. No, and that's the reason why we use alerts, because alerts, they will send you notification when price hits that point or gets to that point. Okay, or gets the alert triggered. All right, so now, like I said, I did mention it in the very first videos that I did. You want to come up with a time interval at which you will be checking your charts. Okay, so let's say you want to check your charts after every 6 hours. All right, and when you come after 6 hours, let's say you open your charts after 6 hours. Okay, as soon as you get this break on the higher time frame, you want to be checking your charts in after time intervals. Okay, so let's say you chose 6 hours. Okay, so after 6 hours, let's say you check your charts and price was right here. All right, so that means this will be the last higher low to be formed, and this is where you will place your alert and wait for price to come and trigger this alert. Okay, and as you can see, price did not come back. Okay, when it was right here, it did not come back to, it would not have come back to trigger this alert. And what did it do? It just went ahead and just kept on rising and rising, and as it rose, it created these higher lows and higher highs. Okay, so let's say after another 6 hours you come back and price was right here. Right, so you go ahead and delete this alert, because now this right here will be our last higher low. Right, so this right here will be our last higher low. This is where we would place our alert. So we'll delete this alert and place it right here. Okay, and as soon as you place your alert, you just close your charts. Okay, and go do something else. You don't want to be on your charts the whole day. All right, that's the whole point. Okay, this is not a 9 to 5. All right, so you just, as soon as you place your alert, you just go ahead and find something else to do. All right, so that means if you check your charts, let's say after another 6 hour interval, prime price was right here, you will go ahead and mark your market structure. Okay, and then this will be your last higher low. Okay, and this right here is where you will place your alert. So let me go ahead and place the alert right now. Okay, so I will create the alert. All right, and I want it at, because I want it at this point. Remember, this is the point of the last higher low. So I'll go ahead and just make sure I type that figure in. So 1.350. Okay, 30. All right, then go ahead and click create. All right, so the alert will be placed. Okay, so let me go ahead and create some more room on the chart. So the alert will be placed at the point, and I could go ahead and just drag this. Okay, but I want it right there. Right, so now the next thing I want to talk about is a break. Okay, because sometimes price just comes and wicks. Okay, there are fake breakouts and real breakouts. Okay, so you want to make sure, because when price, let's say price was right here and we set our alert down here. Okay, price will come down, and as soon as it hits that alert, we will get a notification either by email or they will send it through our mobile app. Right, I show this in those two videos, so you can go ahead and watch those videos. Okay, but I want you to be careful when it comes to the break. Okay, we want to get a real break, guys. Okay, this right here is a real break. All right, but this right here, if this was the candle that created a break, if this candle was right here, okay, this would be a fake break, because it just wicked down and it closed all the way up. Okay, guys, you have to be very careful when it comes, because this step is very, very important, guys. Okay, it's very important. All right, we want to make sure we get a real break. We want to make sure the body of the candle closes below the last higher low, right? That's what we're looking for, not just a wick and then price closes up. Okay, in this case right here, price broke it, and this is a real break because the candle of the body of this candle closed below this higher low. So you want to be careful, all right? And as soon as you get that break, all right, next thing you want to do is draw your trade bracket. Okay, so this is just a rectangular tool, okay, that I just use. Okay, so you just go ahead and draw your trade bracket right there. So I'll go ahead and label this. So this right here is the trade bracket. All right, so I'm going to just label that. All right, so trade bracket right there. And I explained this, okay, in those two videos, the very first two videos that I did make. All right, so the trade bracket gives you two things. Okay, the trade bracket gives you an entry. All right, as soon as we get a break, we don't need the alert anymore, so we're done with the alert. Okay, so I'm just go ahead and just delete that. All right, so the trade bracket gives you two things. Okay, it will give you your entry and your stop loss. Okay, in this case, okay, since we're looking for sales, okay, so our stop loss will be up here and our entry will be down here. All right, so when we get a break right here, we'll draw our trade bracket, and as soon as price comes back, okay, we want to take this trade. Okay, as soon as price hits this comes back or pulls back in this trade bracket, okay, we want to take this trade. But I mentioned this and I say you could draw your trade bracket in two ways. You could either draw it from the last higher low to be made, or the last higher low to be broken, to the last higher high to be made. Or you could draw it from the last higher low to be broken, okay, to the last point price reached. Okay, and each of these ways have advantages and disadvantages. If you draw it from the last higher low to be broken to the last point price reached, you will have a less, okay, risk to reward ratio, a lesser risk to reward ratio compared to this other one, but you chances of price actually coming back to stop you out and going in your direction will also be minimal. Okay, and if you draw it to from the last higher low to be broken to the last higher high to be made, you will have a higher risk to reward, but chances of price coming back, stopping you out and then continuing in your direction will also be high. So be careful when it comes to that. All right, so when you draw a trade bracket, next thing you want to do is measure this trade, and this right here is very, very important, guys, because remember, according to the strategy, we only want to take trades that are at least a 1 to 2. Okay, and since this is a sell trade, I want to use the short position tool. And like I said, the trade bracket gives us two things. It will give us our entry right here, and it will also give us our stop loss. Okay, so I'll go ahead and just drag this to the point the pullback started, and as you can see, this is an 8.7. so this trade right here is more than worth it. Okay, because this right here will be a 1 to 8.7 trade. All right, so now what I'll do, so since now I've measured, this is also an important point because you want to measure it. All right, let me go ahead and show you, because like I said, this right here will give you a higher risk to reward ratio, but chances of price actually stopping you out when you draw your trade bracket from the last higher low to be broken to the last higher high to be made, it will give you a higher risk to reward ratio, but chances of price coming back and taking you out will also be higher. So now let me adjust the trade bracket and I'll show you what I've just been explaining. So if I adjust my trade bracket right there, okay, what that means is, so I will also adjust my stop loss. Okay, and as you can see, the risk to reward ratio goes down, but this right here is more safer because the chances of price actually coming back to take you out will also be minimal. All right, so let me go ahead and delete this. Okay, and I'll keep this at the last point. at the last higher high to be made. All right, and as soon as I measure this, so I'm done with this measuring tool. Okay, because I'm done now, making sure this trade right here is eligible according to our strategy. All right, and so what I'm waiting for now, so as soon as I draw the trade bracket, okay, so I'm waiting for price to come back to the trade bracket. But again, I don't want to be on my chart the whole day, guys. Okay, and what do? I use pending orders, and the pending order I'm going to use is the sell limit pending order. So just go ahead and right click and click on add. Okay, so select sell, and you can see it's already selected. It's limit right here, so it's sell limit. All right, so if it was right here, I'll just go ahead and click sell, then click sell. Just go ahead and click sell, then click limit. All right, and then click right here where it says sell. All right, so now what I'll do, so I'll drag this because this is the pending order that I want to use, because I won't be on my chart, guy. Okay, this trade right here will be executed automatically. Okay, so I'll just drag my stop loss up there, then drag my take profit down here. All right, so that means as soon as price rises to this point, okay, and it would have happened at this point right here, because remember we got our break right here. Okay, so as soon as price came back right here, this pending order, the sell limit pending order, will be triggered, and then this trade will be executed automatically. I won't be even on my chart by that time. All right, and again, you just want to keep checking your chart in time intervals. Okay, because as soon as the trade is placed, there are two outcomes. You can either win or lose. All right, so as soon as it's hit right here, my trade will be executed automatically. I won't be on my chart. Now what I want to talk about is instances of this execution. Okay, like we said, you want to be checking your chart after a time interval. Okay, let's say you chose 6, or let's say you chose even 5. Okay, so let's say after 5 hours you check your chart and price was right here. Okay, so you go ahead and draw put your alert right here on this higher low. Okay, and then close your chart and go do something else. So let's say after 5 hours, like I said, price was right here. Okay, so this is just optional. Okay, you could keep you could choose the time, if the time interval you want to keep checking your chart. Okay, the whole point is don't stay on your chart. Okay, it's not worth it. All right, so let's say you check your chart after like 5 hours and price was right here, so you go ahead and delete this. You go ahead and delete this alert and then put your alert right here. Okay, so let's say after another 5 hours, okay, you check your charts and price already broke this, okay, this higher low, and price was, let's say, right here. Okay, so you won't be drawing your alert now, because we're already past that level now of alerts, because we already got the break of the last higher low. So what you will do, you just go ahead and draw your trade bracket and then measure this trade. Is it worth it? Then if it's worth it, then you go ahead and place your pending order. Okay, so let's say you open your charts and price already broke the last high low, and price had already pulled back. Okay, that means you won't be drawing your alerts, you won't be drawing your pending orders. You will just go ahead and place this trade manually, because we're already past that level. Okay, already past the level, and price already broke the last higher low, and it already pulled back. Okay, in your trade bracket. So you just go ahead and just draw your trade bracket and take this trade manually. Okay, so let's say after 5 hours, you open your chart and price was right here. All right, you will go ahead, okay, and draw your trade bracket. Okay, and then place your pending order and hope for price to come back. Okay, the only time you would take your trade, if price was right here, if it rolls back again to that trade bracket. All right, so if it does not come back, you don't take the trade. If it's right here, you don't execute the trade. You don't chase the market. The market already left. Okay, the only time let's say we open our charts after 6 or 5 hour interval, price was right here, we will wait for price to come back. If it does not come back, it's okay, we'll let it go. All right, and then wait for another setup. All right, All right, so I've said everything I wanted to say, and I think I've come to the end of this video. I'm gonna close it right here, and I'll be seeing you in another one. Bye.